What's up, guys? Welcome back to the Promiji Money channel, back again with another video. And this is a Tuesday upload. We normally don't upload on Tuesdays lately. We're supposed to be, but we haven't been doing it for some while. But this one, in my upload structure, it had to come before some of the other videos. So here we are. We've got a Tuesday video. Hippie Puree. And today we're actually going to be speaking about a new ETF again from Satrix again this time. And it's called the Global Infrastructure, the Satrix Global Infrastructure ETF. And I think before we actually get into the ins and outs of the actual ETF itself, I think some few months ago on the video that I made about Frank, I was getting into, let's call it a debate or an engagement with, someone who was commenting, because I'm not sure if they subscribed. But yeah. And basically someone was remarking at the fact that EasyEquities is better than Frank, to which I had actually agreed. Then another person came in and said no, in actual fact you can't be comparing EasyEquities to Frank, it's not the same, to which I also agreed. And there were some other things, that person had said, and in there, we got to speaking about, how I felt it was better to go directly to certain companies and things rather than using a middleman like Frank. And basically, just the whole fact of how the finance industry or the, investment shares and whatever industries, there's a lot of middlemen rather in between you and the actual thing that you're buying, one of my favorite movies, American Gangster, Bumpy Johnson speaks about going directly to the supplier, not having to go through people, because when you do that, you maximize profits and returns for yourself. Every stop or every person that you go through, you essentially leaving, a little bit of money with that person or with that company as they render a service for you. And today we're actually going to see that in action. And I think also with that, another thing that my eyes are being opened up to is the fact that, big companies or so-called big companies that you think, yes, they must have lots of people who work all day long doing things, sweating and so on and so forth, only to find that they, smartly package someone else's work as though it's their own, and they pretty much just make money off of that. And that's exactly what the Satrix Global Infrastructure is. If we actually go on over that, they don't have a minimum disclosure document yet, but it is a new listing, and I'm not going to read the first part. It does go into something, but it says the ETF details. The global ETF is listed on the JSE and investors can access it in South African Rand. Satrix will replicate the index by investing in the iShares Global Infrastructure UCITS ETF. The underlying iShares ETF distributes income on a quarterly basis. Therefore, Satrix Global Infrastructure Feeder ETF will distribute all income received. What does that mean, friends? It basically means that Satrix does none of the work, none of the heavy lifting. Satrix takes your money and they go and they invest it in the iShares Global Infrastructure ETF, right? Again, do you then really need Satrix? Maybe you do, maybe you don't. I think the nice part about it is that it's in Rand, so you're not having to do all of the conversions and so on and so forth. But what are you paying in return for that? What is the actual cost or the price of having Satrix actually do that for you? And in actual fact, do we even need to go over the rest of this document? Do we need to look at, the rest of what they're saying here? Or should we just rather go directly to the source? And when you actually, directly try to go to, the iShares website. If you don't know what iShares is, if you know iShares, you'd know BlackRock. If you don't know BlackRock, hop around YouTube a little bit and watch some videos on what they say about BlackRock. It's a really big company. They basically own a piece of everything. But yeah, BlackRock are the ones who are administering this ETF through iShares. And the first thing that I will say, iShares goes into a lot more detail about their ETFs versus, a lot of South African companies. I really wish more South African companies went into the length or the amount of detail actually that iShares puts on their ETF versus some of the other guys. But let's look at the ETF to see if it's actually worth getting invested in what Satrix had actually put up. And yeah, let's go for it. So on the overview side, it says why would you go for this, and it says it's exposure to the largest and most liquid infrastructure companies across the globe. The second thing is access to infrastructure companies from both emerging and developed markets, and it's to gain exposure to the infrastructure sector. Fund objective, the fund, just give me a sec. The fund seeks to track the performance of the index composed of the international infrastructure companies from both developed and emerging companies. Yeah, look, it's just telling you what the index is. When we bring it a bit down to the performance, I mean, look at how, they show you, the performance. What is this, discrete? If they show you the performance annualized, so if you were to take all the periods and then year by year get that cumulative, meaning the total amounts, across all of the years. This is amazing. This is wonderful. If you go on over to the full chart, it will show you hypothetical, if you had done 10,000 US dollars at the beginning, how it would be looking throughout that period, and they show you how it's doing versus the benchmark. I can't really see though another color. Oh, there it is. I need to enable it there. Oh, wait, there we go. Okay, so there's the benchmark in green. Sorry, there's the ETF in green. If we throw the benchmark, it's literally on top of it. I can't zoom in anymore, but it's literally right on top. So it kind of looks like it's tracking the index pretty well and pretty closely. So that's not too bad. Let's just look at it annualized over 1 year. The returns that they're offering is 16%, which is quite good. I would say for a year, that is a really good return. 3 years is about 8.93. I would honestly need to look at what the S&P 500 was doing over that time annualized, but I don't think this is particularly bad. If you look at it from a cumulative point of view, over 3 years, you would have grown by about 28%. Over 5 years, it's what, 43%. 10 years, it's almost 87%. So it's almost, getting close to doubling over 10 years. And I'm assuming that this is based off of just the price that is indicated. It's not counting in actual fact the distribution, which we are going to get into a second. Cool, let's keep going. Let's actually, down here, they've actually got the distributions where you'll see the distribution table. I think they give this out quarterly. So there's an August distribution, a May, a February, November, August, May, February, November. So you're pretty much going to be getting money 4 times a year, which is great. The amounts, it's 0.22 cents. No, sorry, 22 cents, 14 cents. Seems like a pretty stable dividend, and it was giving it out throughout the pandemic. I mean, November 2020, August 2020, May 2020, February 2020. These guys have pretty much been giving out distributions throughout. So if you're a person who looks at dividends or looks for, some sort of dividend, this is quite good. Net assets, I think this is 1,419,000,000, and so on and so forth. Started in 2006. Expense ratio 0.65. Let's just pause there for a second. These guys are charging you 0.65 for coming into this ETF, whereas the guys over at Satrix, their expense ratio is 0.80%, which is inclusive of VAT. So what does that actually mean? To me, basically, all that we're getting from it, or all that they're telling us, is that their markup is 15% basically on what's being had here. I guess in the greater scheme of things, it doesn't seem like a lot, but over time, it can really add up. Anyway, a bunch of the other information that they have here really doesn't, have much to do with much. So yeah, outstanding shares, we don't need to know that. Benchmark level is that. The dividend yield, which I'm assuming is this, is 2.01. So that's actually not particularly high. You do get higher, dividend yielding ETFs, but I think if you take this and you pair it together, with the overall growth of the actual ETF, I think it's quite good. I mean, if you add, this amount of money plus, the almost, call it 8-9% that it's growing by every year, it's pretty decent. PE ratio 3, Y beta. I think this has to do with the how it does versus the overall S&P 500, or how closely it is linked to the S&P 500. I think a beta that is less than 1 means that it's not, or it's less volatile than the market. Greater than 1 means it's more volatile than the market. So I think if it's like a +1, it means that if the S&P 500 moves by 1, the thing moves by 1 and then some, or this one. So this one is pretty much, yeah, as you can see, it's almost linked to the benchmark, being the, they did list the benchmark up there, but yeah, that's basically what you need to know about this. Sustainability, we don't really care about. Business involvement, we don't really care about. Registered locations. Holdings, here you go. They'll show you all of the top holdings. It's this Nextera Energy, Union Pacific Corp, American Tower REIT, Crown Castle REIT. So as it said, you know, a bunch of REITs. I think there are quite a few companies. It's utilities, industrials, real estate, energy, all of those sectors. That's basically where it is. I think they do list it as the industrial sector, and it even, you know, will give you everything at the specific date. It will give you the market value, and you'll actually even see the weighting. I mean, the biggest company is 6%, you know, and there's a bunch of other, you know, much smaller companies. Anyway, securities lending, not really going to go over that listing, the different stock exchanges that there are, and yeah. So I guess the question is, why, or would you rather get invested in the iShares directly, or would you go via Satrix? Now, I think for ease of use, the Satrix route actually does make sense. I mean, you are investing in rands, you're probably going to get your money back in rands. You don't need to deal with the whole hassle of bringing your money into the country. You know, and once it's here, dealing with tax. You are going to have to deal with tax regardless, depending on how you have it. And maybe if you can get this as part of your tax-free savings, I think that's an even bigger bonus. But for me personally, I would much rather prefer going, you know, directly through the broker that I'm going to use much later on in the year than go the Satrix route. But I actually think on this one, because of, you know, how it's been growing over time and it has a decent, you know, dividend yield, I would actually try going the Satrix route. And I think I actually am gonna, you know, start up something with this and see how it goes, just for my own sake, just to, you know, sort of know how this thing goes. So watch this space, I guess. Expect a new video coming soon, or videos coming soon on the iShares Global Infrastructure, and I'm going directly to Satrix. I'm not going to go via EasyEquities and so on and so forth. I don't know why we like to fetch all of the middlemen and give them a piece of our money each and every step of the way. But yeah, we're going direct, and yeah, that is going to be the plan when it comes to the iShares Global Infrastructure ETF or the Satrix Global Infrastructure ETF. And as is always the case at the end of every video, you know, I always say thanks for the love, thanks for the support that you guys keep, you know, having on my videos and on the channel. You know, the 50K challenge is still up. 50,000 subscribers by the end of the year. One person is going to get 50,000 Rand, but I'm not just going to leave it there. You know, at each milestone, starting from 5,000, I will be giving away that equivalent amount of money till we get all the way up to the 50,000. So let's get to 5,000. Let me give the first subscriber 5,000 Rand, and then we just work our way to the 50K before the end of the year. Anyway, it's been your boy, Prem Chimani. I hope you're all having a good day, and yeah, we'll see you next time. Peace.